Hello everyone, and thank you for attending today, and welcome to this presentation of the correct way to trade pullbacks. Welcome, my name is Primo. I am the president and founder of Specialist Trading, and for those of you who are unfamiliar with our website, we are first and foremost an educational company. Even though we provide all of our members with strategies and with the ways in which to trade, we're more about empowering you with this information so that ultimately you can make your own trading decisions based on your own decision process and your own insight, which we help to teach and nourish you. Now today we're going to have a great presentation. I'm going to be talking specifically about what I feel is the correct way to trade pullbacks. We're going to show you some ways in which most people trade pullbacks and how there's no consistency. And we're going to show you some common ways that are actually very good and formidable ways in which to trade pullbacks. And then we're going to show you which we think, in our opinion, is actually the best way in which to trade pullbacks. But as always, before we begin, I ask that you please take a moment to view our disclaimer. I'm going to show you a lot of performance results. I'm going to show you a lot of examples, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. So as you're taking a moment to view our disclaimer, I'd also like to invite each and every one of you to follow us on Twitter. We post a lot of free information there on a daily basis, anywhere from daily financial wisdom to actual signals that we're currently in. In fact, we just posted this morning a signal that we are in the British pound for all of you Forex traders, that we went short the British pound yesterday, and so that is a current signal that we're in. We also post signals in stocks as well as the futures markets that we are currently in as well. So I invite each and every one of you to follow us. That's our handle there at SPCLSTTRADG. Okay, so just to give you a little bit of philosophy about what we do at Specialist Trading, I've been trading for roughly 37 years. I began my career for trading on the floor of the Pacific Stock Exchange. I was on the floor for a total of 16 years, and 9 of those years I was a specialist. And so I traded through the crash of 1987, through the great bull market that followed afterwards. And I know a lot of people think, well, boy, you know, you're on the floor, you had this insight and all this special knowledge of where orders were and everything. It was like a license to steal. I'm sure you just made tons of money. It's a little bit different for people like us who are trying to learn how to trade. Well, that's not true. In fact, I make no secret of it. I always tell my students and my members and the people attending the webinars that my first year or two as a specialist, I struggled tremendously. In fact, I couldn't make a dime. I was really just treading water. I didn't know how much longer I was going to be actually on the floor because I just couldn't seem to make ends meet. I'm sure a lot of you are going through the same process right now where you have a number of good trades and you feel you're finally back on track, and then you have one trade where you give everything back and you've lost it all. Well, this is the way my trading was, so this is why I really empathize with a lot of you, because I know exactly what this is like. It's very discouraging, and you start to really become frustrated because you put so much hard work and knowledge into trying to learn how to trade, and nothing seems to click. It doesn't work. Well, my mentors, who were also traders on the floor, they've been trading for about 30 years or so on the floor, told me that, see, most of what I was using was faulty. That's why it wasn't working. It was conventional wisdom that had taught me that I was supposed to trade this way, and when I looked at it, this conventional wisdom wasn't working. All the things, all the books I was reading, all the courses I was taking, everything I was relying on just had no consistency to it. So it wasn't until they taught me these factors and how to simplify my trading that my trading actually started to become consistent. We're not promising or guaranteeing any of our students home runs are going to make thousands and thousands of % a year, but we are really feeling confident that we can instill this level of consistency in your trading. And that's what we're trying to do with sound knowledge, and then we mold that knowledge into some type of trading plan that fits your personality. So this is my goal at Specialist Trading. As I stated, we are first and foremost an educational company. We want to educate you with all the things that I've accumulated in 37 years so that hopefully we can shorten your learning curve and get you on that road to consistency. We're not just about force-feeding you signals and saying, well, here's a buy signal, go long here. Here's a sell signal, sell this, without you being involved in the process at all. We want you to be a part of the process. We want you to be in the game. So that's my goal, as you see here, not to trade for you, but to teach you how to trade with the specialist edge. This is the same edge that was taught to me. This is the same edge that turned my way of trading around so that I was able to be consistent, and I've been able to trade now for 37 years. Okay, with that said, let's begin. And a couple of things just before we begin. I noticed we had some people that came in a little bit late. So once again, we're having this, we had to have a rescheduling because of some other previous engagements and speaking engagements I had. So we usually speak and have these presentations roughly after the close on a Wednesday or Thursday. But today we're kind of doing it earlier because we wanted to at least fit in one educational presentation for you this week. And so we're doing it at this early time. If this fits your schedule, be sure and drop us a line and email us or call us up at the number provided as you see in the chat box. And we'll try to reschedule more along this time frame. Also, if you have any questions in this particular presentation, please kindly wait till the very end. I know the most common question that I get in these presentations is this recorded? Yes, all of our presentations are recorded. So you can contact us and request a link to the recording if you have to leave early or if you can't stay for the entire presentation. And then lastly, something that doesn't come up often, but I think it's because of the early time, out of my trading office window, there is some construction happening right now that just happens, at the worst of times. So if you happen to hear a crash or some type of a bulldozer moving, don't worry, it's not the webinar. It's simply a lot of construction going outside, so pay no attention to it. All right, so why don't we begin? And once again, thank you for kindly waiting to the very end of the class to ask any questions. Okay, here's what you're going to learn today. We're going to start out by showing you actually the wrong way to trade pullbacks. And this is the way 99.9% of most people trade pullbacks based on these parameters. I say this firsthand because this is the way I used to trade. And you'll see that it works a few times in these examples, but that ultimately there's no consistency. And then we'll show you a simple but high probability technique for trading pullbacks in all markets in all time frames. So we're going to share this with you and show you exactly what is needed, and we'll give you a number of things to use along the way you can start using as early as tomorrow if you like, or I should say Monday. All right, so let's first of all define what a pullback is. In order to trade pullbacks, we're not trying to pick tops and bottoms the way other techniques are. We're looking to trade with the trend. But within the trend, as we see here in this example, we have an upward move followed by a downward step down move, and then followed by another upward move. So conventional wisdom tells us that these sell-offs are the pullbacks. They are still in an uptrend, but that the little stair step, downward stair step, and we should be looking to buy somewhere on these little downward stair steps. See, what usually happens is if you have a same thing going with a downtrend, you'll have a downward move followed by an upward stair step. This is the pullback to the upside, and then the downward move continues. So you want to be looking for areas to sell or short roughly around these parameters right here. Now, if we look at the best case scenario, what usually happens is you look at the parameters on the pullback that were first initiated, and either this can be some type of support level, this can be some type of Fibonacci number, but price seems to settle or stop at this level, and then it resumes. So what most traders do is they look at that level, they look at the parameters, and then they decide to add them at this level right here. And once they meet or coincide exactly with the same parameters that were used in the prior pullback, well, this is your buy signal, and this is where you buy because you're hoping that the trend will continue upward in the next move up. But unfortunately, this is what usually happens. You'll step in and you'll use the exact same parameters, and it continues to go lower and lower and lower. And the same thing will work in a downtrend. We'll have a nice downward move. Here's the pullback. It works perfectly. It comes up either to the resistance level or some type of Fibonacci or some type of indicator, say in an overbought or oversold type of tool, and it works perfectly, and the trend resumes. And then we have another pullback to the upside, and the same parameters are met, the same situation or environment. So you decide to get in and sell because it worked the first time. It should work here again. So you're feeling as if the trend is going to resume lower, and then lo and behold, the minute you get in, it doesn't work and goes higher. I'm sure this looks familiar to a lot of you. This happens all the time. It used to happen to me almost in every trade. And these are what people usually use for those type of parameters in order to judge when and where a pullback will end. Support and resistance is the most common. If we look at this generic chart here, this is the goal of what you're looking for. Support and resistance is basically a kind of stair-step upward trend, and every time you meet one of those tops, that's your resistance. Every time you meet some type of bottom or pullback, that's your support. So obviously you want to be purchasing where that support is. Now, here is a chart, a generic chart. As we see, it follows that same parameters. You have the kind of stair-step up, down, up, higher, low, upward, and then we're looking for some type of a higher low, or at least at this level because this should be the support, and this is where, if we get to this level again, this would be a double bottom. This could be the support level, so this is where you want to place your order to buy. So usually what traders do is, based off all the books and everything, well, they place an order to buy and it doesn't hold. It's kind of an anemic hold there, so they figure that, well, maybe I jumped in a little bit too quickly. Perhaps this isn't the support. Maybe this is the support. So you decide to double up and place another order to purchase here, but then that doesn't hold, okay? And this is usually what happens with support and resistance. These trades will work until they don't work because they're very subjective. One trader's support is another trader's resistance. So they're very difficult to trade. I know there are a great many traders who make a good living trading off support and resistance, but they have some type of an inner chart where they can spot and they know how to determine where these levels are. But it's very difficult to teach. I know I personally have never been able to have any consistency using these types of techniques. How about Fibonacci levels? Okay, I know a lot of traders love to trade Fibonacci levels, and Fibonacci levels are just basically numbers that are percentages of the move, of the actual move in the direction of the trend, and you want to place your order there because it usually stops anywhere from 50%, 62%, 75% of the retracement, and that's where you should get in and the trend will resume. So in other words, if we look at this generic chart here, we are obviously moving lower. So the move was from basically from this top to this bottom. Now the retracement would be a rally or a bounce up here, and you would basically get to the 62% level, very common level, and that's where you would sell at the 62% level. In other words, 62% of that move from here to here, and you go up 62%. And hey, guess what? It worked perfectly. All right, so you're excited. Let's say you had a great trade, or let's say you watched that and you're all excited to get in on the next pullback because we're still in a downtrend. So we have the 62% level here, judging from this top move down to here. So 60% of that move would roughly come to right here. So you place an order to sell, and you get right there and you sell. So you're all excited, and it really doesn't go lower, but it doesn't go much higher either. And then you decide to sell at the 75% level, 3/4 of the distance in the retracement. Just to double up, you feel confident that we're going to come down some more and you won't need it to come down as much in order to recoup your loss. So you sell some more and it goes up but then comes down, and you start to feel, well, it's going to make its move down, but then ultimately it doesn't, and the pullback doesn't work. Okay? Very, very similar instances happen all the time in all the markets, regardless of time frame, regardless of market, and regardless of what direction. Once again, it's because there's no consistency. It's very difficult to determine where the support and resistance levels as well as Fibonacci levels are. Remember, this is the way it usually happens. The scenario is what worked before usually doesn't work again. Okay, so we want to apply the same knowledge we use in the pullback that work, but then when we do, it goes the opposite direction. It's almost as if it's too late. So what we need is a correct way to enter into the pullback. Now, entering a trade based on support and resistance and or Fibonacci levels is similar to picking tops and bottoms. These are extremely difficult techniques to master because they are very subjective. In order to have a high probability pullback entry, one must wait for confirmation that the pullback has concluded and that the market is headed back in your desired direction. So in other words, we want to know, we want to confirm at least that it's going in our direction. We don't want to guess and say it's going to stop right here at 62% or it's going to come right back to support and hold. That's just guessing. It's like picking a top or a bottom. We have no idea. No one knows if it's going to stop there. We're just basically hoping and praying that it comes to those levels. It's easier to wait for confirmation. In other words, wait to see that the market starts to go in your direction, and then all you have to do is jump on board. So in other words, what we should be looking for is, rather than try and pick a level, which once again has no consistency to it, we want to wait to see that we confirm that we're going back in our direction, and then so we don't pick the bottom, that's okay. We just jump on board once it's going, and then hopefully we'll have a little higher consistency to our trading. It's the same thing with going lower. Rather than pick these levels right here and say, well, the same parameters worked here, so we'll use the same right here, and I'll place a limit order to sell. It's basically similar to picking a top. We don't want to do that. We want to wait to see that we are going in the desired direction. Once we see that we've gone enough in that desired direction, that's when we jump on board and sell. And hopefully the trend will continue in our direction. So do you see how that works? We're waiting to see that we have some type of confirmation either through the market we're trading itself, or through some type of indicator, or through some type of pattern that we're watching that gives us confirmation that most likely the pullback has concluded. So that way we just don't have to guess that it's going to stop at this number. Okay, so here are 3 different types of confirmation, once again, that you can start using as early as Monday, or even when this, actually today, when this presentation concludes in about a half an hour, you can start practicing this. We would suggest that you paper trade just so that you fully understand the process. But there are basically 3 types of confirmation that are very standard, and they work very well. In fact, we incorporate some of these into our actual strategies that we have here at Specialist Trading. I'm going to share them, these 3 with you. The first one is price trades above the previous or below the previous bar. In other words, so if you get to a point or you feel as if, well, boy, this is where I want to buy, my strategy says I should buy here on this pullback, wait for price to trade 1 tick above if you're going long, or 1 tick below if you're going short. That way it confirms that it's going in that direction. So many times traders will see a trade and they'll say, well, okay, I get the buy signal, we've pulled back enough, my strategy generated a buy signal, I'll just buy at the market. And you buy at the market, and then guess what happens? The market falls out of the bed the way it did yesterday, and everyone's left holding the bag thinking like, boy, what happened to that buy signal? It would have been better if you waited for price to trade 1 tick above the setup bar's high. So in other words, if yesterday you got a buy signal, well, you wouldn't buy at the market, you'd wait for it to trade above today's high sometime today. So that's one technique. The other technique is a candlestick pattern. In other words, we're looking for some type of pattern, or some type of 2-bar pattern with candlesticks that tells us that the pullback or the short-term trend has concluded. There are many techniques. One of the best is an engulfing pattern. We use this in one of our Forex strategies where it works tremendously well. In fact, it's our most consistent strategy, where we use a candlestick pattern to tell us that the trend has resumed in our desired direction. And then lastly is an indicator. You can use any type of overbought, oversold tool. It can be an oscillator, it can be a moving average, crossover, but just something telling you that, okay, we've gotten to the point where I feel my strategy says we should buy, but I'm not going to buy until the indicator confirms it. Let me show you examples of how these 3 work. Once again, I'm not saying that these are the best, but these are 3 consistent ways. I mean, they will add some level of consistency to your trading if you apply these. Here's an example where all 3 of these could be used. We have some generic chart here. We're in an uptrend, and here's our pullback coming lower and lower and lower. Now let's say somewhere around here you get a buy signal, okay? Or let's say right here on this particular day you get a buy signal. Rather than just simply buying at the market, we're only going to buy if price trades 1 tick above. Because we've seen things happen before, you know, where you get a buy signal, and then if you would have bought at the market, then the next day it gaps lower and keeps going lower. So if this was the day we got the buy signal, we have to wait for the next day to see if it trades above. Now it can be just 1 tick, 5 ticks, whatever meets your fancy, but just you want to see that it trades above. It does not have to close above there. You just want to see intra-bar it trades above. You could put an open order, a buy stop there, and if you're going short, a sell stop, whatever you want. But that's your confirmation that most likely we're going higher. Now that's that first technique. The other technique was to rely on a candlestick pattern. This is a bullish engulfing pattern. What this means is kind of a reversal, a 2-bar reversal pattern, where you had a lower day, a lower body where you opened and closed lower, and then the next day you opened and closed higher. And the second day's range from open to close totally engulfed the previous day's range from open to downward close. So that's a good sign. You have kind of a mini 2-bar reversal. That could tell you that this sell-off has concluded, and most likely we're going to be going higher. And then lastly, you could use an indicator. All right, you have here just a standard slow stochastic. We know when we get to this area, we are in the so-called oversold area, and if you wanted to, you could wait for these lines to cross. You could use anything. You could use an RSI. You could use a moving average crossover, just something to give you a little bit more confidence on when to get in. Now, once we apply these, we don't have to apply all 3. You could apply all 3 if you want, or you can apply just one. But usually, as we stated, it gives you a higher level of consistency that the sell-off or the pullback has concluded, and now it's time for the upward trend to resume. See, what happens with most people is they'll say, boy, this is a really large sell-off day. I'm going to buy here because we're way down too low and it's going to bounce. Well, what usually happens if you have a couple of days where it seems to hold, but then it starts to move lower, and then you get scared, you start to doubt yourself, and you throw in the towel and you stop yourself out. And that's usually at the time where you're getting these confirmation signals. So it's better to wait for confirmation, either through price trading one tick above, either through some type of candlestick pattern, or using a moving average or some type of indicator telling you that most likely things are going up. These are all three, fairly consistent techniques. I wouldn't say they're great, but they will help you. So once again, the title of this presentation is The Right Way. Now, these are okay ways to trade and look for pullbacks, but in our opinion, it is not the correct way. So we share with you these three types of confirmation, all right, for entering into a pullback. But now we want to share with you the correct way to trade pullbacks, the correct way to know when a pullback has ended, and the correct way that will give you this very high probability and high level of consistency in your trading. And that is by applying the PET-D, or the Primo Early Trend Detector. It's a tool that I was learned on the floor, that I was taught, I should say, on the floor, that I learned on the floor, and it's something we had to calculate by hand. And all it is a proprietary color bar algorithm. All right, and when I first learned of this on the floor, it was a simple calculation you had to come up with, but it was too difficult to apply to intraday bars, obviously, because you would have to change it and apply it every 5 minutes. It was just too cumbersome. So we only looked at it on a daily basis. But you can now apply this, because we formulated it into a color bar algorithm. You can apply it to 5-minute charts, tick charts, weekly bars, any market, and in any time frame. So what we're looking for is when the PET-D gives us a series of green bars, it's telling us now that we are in a short-term uptrend, okay? And then conversely, when we have a series of red bars, it's telling us we're in a short-term downtrend, right? And this is not the overall trend, this is just the short term. So this is a great tool that can be used in a number of ways, and the way we're going to be using it today is to confirm when it's time to get into a pullback. So here are the rules using the PET-D with any type of a pullback trade. Remember, a pullback trade is just simply finding the trend and then looking for a counter move within that trend. So if it's an upward trend, then we're just looking for a little sell-off, all right? A sell-off could be a couple of days, it could be a couple of weeks, it could be a couple of months. But we want to just know, once that sell-off has concluded, when is the trend going to resume its upward course? Well, in an uptrend, a small amount of red bars will appear from time to time. This is basically telling you that you're in a pullback stage. What we want to do is wait for the next green bar, because that's our confirmation to enter. All right, let me show you what I mean here. Here's an older chart of Facebook. We are obviously in an uptrend. We've been going up, and we start to sell off. Now you start to see the splashing of red bars, but we're still in an uptrend. So this is just the pullback phase. This is just telling us that the short-term trend is now down, and we're going to wait for the first green bar, which is right here. So this is our confirmation telling us that the pullback has most likely concluded. It's time to get in. So that's where you would buy, and guess what happens? You see how simple that is. We don't have to wait for any type of candlestick pattern. We don't have to look at any other indicators. We simply look at a short-term trending tool to tell us when the trend has resumed its upward course. It's back in sync with the overall trend. And we're just going to do the reverse if we want to go short, because in a downtrend, when the majority of the trend is going lower, a small amount of green bars will appear. This means we're kind of bouncing or rising to the upside. We're having a little pullback to the upside, or a bounce in price. And you're going to start to see a few green bars. Once you see a red bar appear, that's your signal that a confirmation is now in order and that you can have a sell entry. Why? Because the red is telling you that it's now back in sync with a downward trend. So if we look at this chart here, an older chart of the E-mini, we see that we have a downward move, and we have a kind of a bounce here, and then we start to see green bars. Now this is not telling us that the overall trend is up. This is just telling us that the short-term trend is up. It's the counter trend or the pullback to the upside. And now we're waiting for the first red bar to appear, which happens right here on this 5-minute time frame. So this is our signal to sell. So you would sell at the close of this, or you could wait for it to trade one tick below, however you wanted to do it. And then look what happens. The trend resumes. Now guess what? We have another pullback take place in this 5-minute chart. Here's the next pullback, Here's the next red bar, so you get a second chance to get in, and you go lower. Here's another pullback with one green bar, and then another chance to get in. You sell again, and it goes lower. So you see how simple this is. We just showed you a 5-minute chart and a daily chart, two different markets, two different directions, how well this can work to timing your entry or confirming that a pullback has concluded. All right, so let's look at some stock and ETF examples, showing how this works mostly on a daily basis and some weekly basis as well. Here's actually a monthly. Let's start out with a monthly chart of Apple. Now, going back all the way to 2010, about 4 or 5 years ago, we see that we're in a really sustained upward trend in Apple. Okay, and then we started to sell off. Now, a lot of people thought that Apple had topped out, but on a monthly time frame, the overall trend is still telling us we're up. All we have to do is wait and wonder when this sell-off is going to conclude. Well, we apply the PET D, and we see that the bars were all green while we were ascending, and then we started to sell off, and naturally we got some red bars. So we wait for the first green, and there it is. There's our signal to buy, roughly about 68, 69. And then we had another sell-off here, another short-term pullback, and another signal to buy, once again about 75. And then the trend resumed upwards. Now, obviously, this is for more investing. This is more of a portfolio type of trade. If you want to trade this on a daily basis, let's look at a daily chart, a current chart going up into the first or second week of September in Apple. Obviously, we're in an uptrend, and we had this series of some pullbacks here, some very nice pullbacks. How would we have known, looking back in hindsight, when to get in when these pullbacks had concluded? Well, we apply the PET D. Here's the sell-off. We have the red bars appear, and the first green bar that appears is our buy signal. So we had 3 pullbacks and 3 specific buy areas. And you notice how the minute we got in with the first green bar, we had a nice rally to the upside, about 5 to 10 to 20 points. How about when? This is another current chart up until the second or third week in September. Obviously, we are in a downtrend. We had this nice downward move followed by a nice upward pullback and then followed by another downward move. How could we have taken advantage of kind of going short somewhere around this pullback area before we knew that it was actually going to be headed lower? Well, we apply the PET D, and the bars are still red, and we get 2 green bars here, but then the first red is our signal to sell, and then look what happens. You could have gone short roughly around the 200 level and ridden it down 25 points in the next month. We realize this is an expensive stock, but you could have purchased put options on this and made a nice quick 25 points in a couple of weeks, or 3 or 4 weeks actually. This also works on ETFs. Here are the QQQs, the ETFs of the NASDAQ market. Coming into the second or third week of September, we were in a very nice uptrending market. We had a couple of pullbacks here along the way. How would we have known to buy here or either any of these sell-offs along the way without thinking that we were starting to really change trends and go lower? Well, we apply the PET D, and we see that most of the bars are green, or red, green, but when we have red followed by the first green, that's our signal to get in. So we would have caught this run. We had another red bar followed by a first green, another pullback here, and then the first green, and then another one, which would have happened just about last week. You could have taken advantage of that nice bounce before we sold off again. How about gold? That's the ETF on a GLD on gold. We are in a clear downtrend. Gold has been going lower and lower up until this past week. This is a current chart. We apply the PET D in order to tell us where these pullbacks have concluded. Now we had a downward move here. Here's the pullback in green, and we have to wait for the first red bar, which is right here. That's your trigger to sell. You could have sold it roughly about 125 and made a good 7, 8 points in the next month or so. KLAC, as you can see here, we've been in a steady uptrend. We had one major pullback right here. A lot of people were calling it this was the top of the market. We had reached resistance and we're coming much lower. Not in our estimation. We were still in an uptrend. All we wanted to do was apply the PET D, wait for this pullback to appear in red, and then wait for the first green bar, which was right here. Could have gone long roughly around 73 and made a good 8 to 10 points in the next month or two. And this also works on commodities. Here's a chart of crude oil. Current chart of crude oil. Obviously, we've been in a downtrend. Crude oil has been headed lower. We had a really nice pullback here. We had another one here. Even had one here, I believe. We apply the PET D. Here's the first red bar. here's the first red bar, and here's the first red bar. In all those scenarios, that's where you could have sold, getting in right off the bat on the end of these pullbacks. Okay, let's look at some E-mini S&P examples. We looked at daily bars and weekly or monthly bars. Let's look at some more different time frames. Let's start out with a daily example that happened just last week. We were in an uptrend in the E-mini, and a lot of people were saying that's it because of the world events that are happening in the world, all the negative news or the economy. The market has topped out. We should get out of the market and no longer be in. So a lot of people were shorting. But according to our estimation and our analysis, we weren't in any way trying to short the market because we were still in an overall uptrend. So this was simply a pullback. So we were watching this. We applied the PET D. We waited for the first green bar to appear right here. This was, I believe, the 16th of September. This was just less than a few weeks ago. And you could have purchased this. This was the future and made a good 10 points on this in a couple of days, 10, 15 points on this. Here's a 15-minute chart from the 19th. This was last week as well. So this is a week ago today. We're in a downtrend. We had some really nice pullbacks here. We had a downward move. Here's the pullback. And if you were lucky enough to carry positions overnight, you could carry them into this downward move. But how could we have pinpointed those entry points? Well, we apply the PET D and we wait for the first red bar to appear. The first red bar to appear in a downtrend is your signal to enter the trade. So you think you could have done pretty well trading the E-mini just last week using this technique. This was on a 15-minute chart. You can also trade this on a 5-minute chart. This was the 24th or Wednesday, just a few days ago when we had a nice upward move in the market. We were in an uptrend on a 5-minute basis. This is the first couple of hours of the trading day. So we apply the PET D. We see that we're in a nice upward move where the PET D is green. We're selling off, and there's our first red bar. So all we want to do is we don't care how many red bars appear. We just want to wait for the first green bar, and it's right there. So you could have purchased roughly about 1984 and made a quick 8 points in the E-mini in just about an hour or so, just because you were able to fine-tune your pullback. And then lastly, let's look at some Forex examples for all you Forex traders out there. Here's a 4-hour chart of the Euro-Yen. Just going back to the 9th, just a couple of weeks ago in September. We're obviously in an uptrend in this nice upward move. We have a sell-off right here, and this is our pullback. So how do we know when to get in? Which bar do we enter on? Someone could enter on this one and say, well, okay, but then we're not sure if we're going to hold or not, so let's just get a little bit more confidence in our trade and add the PET D. Well, the PET D is coloring this green the entire way up, and then we start to have red bars. So we would not have entered on this bar. We would have waited a little bit more until these two bars right here. These were the two bars that were telling us we could get in. Actually, this first bar, and if you wanted to get in one more time, you could have gotten in that. But look at the nice rally that ensued after that, because the PET D gave you the confidence to jump in. And then a daily chart of the British pound. The British pound has really been falling out of bed. Okay, it's been going down for some months now. It's been in a very, very strong downward move. But believe it or not, there have been some times you could have been gotten into this on these small little pullbacks, such as this is right there. We add the PET D. We see that we were green right up here, and we started to turn red roughly at these 2 points, and then here again. So these were all areas. At the very top, you could have gone short on these two areas where the first red bar appeared after a green series, and then right here. Even if you had missed this entire downward move, you had another chance to go short right here and catch all this. Okay, so let's recap. What do we share with you today? A simple but high probability technique for trading pullbacks in all markets. That's using the PET D. Remember, we showed you what we feel has no consistency to it. That is basically using support and resistance and conventional wisdom techniques such as support and resistance and Fibonacci. Now, I'm not putting those down. I know there are a lot of great educators and a lot of great traders that can make money trading those styles. It's just very difficult because they're so subjective. In other words, when we teach something as a teacher, as an educator, I want to make sure that everyone sees the same thing when we talk about it. I don't want just someone saying, well, I get it, and other people saying, well, I don't understand where this support is and where this resistance is because I saw it somewhere else. Everyone should come up with the same clear-cut example and the same clear-cut decision-making process. So that's why things that are like support and resistance are very difficult because two people can look at the same chart and come up with entirely different scenarios. Whereas if you apply the PET D, well, no one can have a different idea when you see a green bar appear. If it's green, and that's your signal to get in. Conversely, if it's red, and that's your signal to get in. There's no two ways about it. So we're just trying to make things, as I stated in the beginning of the class, as simple as possible so that you can get on that road to consistency. And it's really all the things that we've been taught, all this conventional wisdom ways to trade, that are really getting in our way of success. Because if they really worked, instead of 80% of all traders becoming losers, 80% of all traders would be winners. And it's just not that way. So there's no consistency in those techniques. So points to remember here as we close and go into a question and answer. This was not a complete strategy. All I showed you was a way to enter into pullbacks. We didn't talk about stop placement. We didn't talk about advanced entry. We just shared with you and said this is the bar you should be entering in. Well, where exactly would you enter? Would you buy at the market? Would you buy one tick above? Would you place a limit order lower? We didn't talk about exiting. How long do you stay in the trade? Okay, do you try to get a real large move out of it, or you just try and take a quick profit and get out? And we didn't talk about money management. What type of risk parameters should we be using? How much capital should we have? So these are all very extremely important pieces of the puzzle that one should have in their pocket whenever they're trading. You can't just say, well, boy, that's great, simple, I'll just buy here. Well, where are you going to get out? I don't know, whenever I feel like it. Or where are you going to get out if you're wrong? I don't know, we'll see how it works out. You can't trade that way because ultimately that's basically trading without a plan. So you need a plan, something that has stood the test of time, and that's something that is currently used by a lot of people. And that's where we want to share with you how well the PET D works with one of our most consistent strategies, strategy number 4. In fact, we're offering all of our attendees today a 2-for-1 special, a bona fide, very, very extremely consistent strategy along with the PET D, the color bar algorithm that I shared with you. In fact, let me show you how you would use these two together, because we've noticed that this combination works extremely well when you apply the PET D to this particular strategy and you use it as a confirming tool. In fact, let me just show you some examples of this strategy in the past month or two. These were all signals, okay, using strategy number 4, and these were current signals to buy Amgen going all the way back to the beginning of August, okay? We had 3 signals to go long. Now, obviously, these 2 signals worked out very nicely. And these are just strategy number 4. But this one didn't work well. In fact, you probably would have been stopped out with a minor loss in this particular trade. So how could we ramp up our level of consistency? Well, we apply the PET D. And what we want to do is we want to make sure that the day that a signal is generated, we want that bar to confirm whatever we want to do. So in other words, if we have a buy signal, it must be confirmed by the PET D, and that bar must be colored green. So if we apply the PET D now to strategy number 4 signals, we see that, well, this bar was colored green, so it was telling you it's okay to take this signal. And so was this one. This was colored green on the day the signal was generated, so it's telling you it's okay to take this signal. So they both would have been profitable. But guess what? This buy signal was colored red. Why? Because the PET D was saying we are still in a short-term downtrend and you shouldn't take this signal. I'm not confirming it. So you would have sidestepped this signal and sidestepped this minor loss as well. We see this work a lot, especially with stocks, but actually with all markets as well. Here's an example to go short HAS. Now, these are 2 strategy number 4 generic signals that you could have taken, that our members would have taken, both to go short. Now, this one worked out extremely well. The minute you got short, you would have had a really nice profit to the downside with hardly any risk exposure. This one would not have worked out. You would have been stopped out with a minor loss. How could we have improved our odds for consistency? Well, we add the PET D. The PET D must confirm the day that the signal was generated that it should be colored red. So in other words, we cannot just take the signal based off face value. If we want to increase our odds for success, we want to make sure that it's colored red. It's confirming to go short. Well, if we apply the PET D, we see that this signal was colored red, and that was the one you should have taken, and obviously that one worked out well. This signal was not confirmed. Why? Because it was colored green by the PET D, telling you that the PET D is still saying we're in a short-term uptrend. So you would not have taken the signal and bypassed that loss altogether. This also works on the indices. So you could use this and apply the strategy to an indice, the QQQs or the oil, or to anything you're interested in getting some type of overall market ideas. You see here, this is just the industrial averages, and 4 buy signals were generated just applying strategy number 4. So you could have used this as a directional tool, saying, well, once we get a buy signal in the market, rather than buy the ETF based on the industrials, it'll give me the leeway to go and buy the stocks I'm interested in, or go along the options I'm interested in. So you could use it that way as well. And as well, on these first 3 profitable signals, they all went up because they were all confirmed by the PET-D. They were all colored green. Now, coming into the first week of August, we had another buy signal here, okay? But it was colored red. So this you probably would not have taken. You probably would have had a little caution taking this signal because it wasn't being confirmed. And it was a good thing you didn't take the signal, because look what happened. So the PET-D is a great confirmation tool as well as some type of entry technique. And I just want to show you a current signal that was just on the 16th. This was just last week. I think we showed you this earlier in the week, I should say in the presentation. This was the pullback we were talking about and alluding to. We had 2 red bars and then our first green bar. So this is how this signal worked out in the futures market, in the E-mini. Now, it wasn't a tremendous move, but you still would have made a good 10 or 15 points off of this trading the E-mini in just 2 days. So that's anywhere from $500 to $750 per contract in just a couple of days with hardly any risk exposure at all. So this is how current the PET-D can work on your signals. And one of the other best things about the PET-D is that you can apply it to any strategy. So don't just feel that this only works with strategy number 4. Strategy number 4 is a really, really consistent strategy by itself. When you apply the PET-D, you really ramp up the odds for success. And you can also apply the PET-D to any strategy you have. Let's say you have a strategy based off news. Well, once that news event comes out, let's say it's a buy signal, you want to make sure that the color of the bar that the signal is generated on is confirming. It should be green. If it's red, you wouldn't want to take that signal. You'll just really increase your odds for success if you apply the PET-D. So as you see, it's a great technique to have along with one of our best strategies, strategy number 4. With this 2-for-1 attendee special, you get instant course access. It's an online course. You don't have to wait for anything to be shipped or mailed to you. It's online and you can access it whenever you'd like. Detailed instructions, so 5 online videos. And remember, in the course, we teach you the entire strategy. We don't just generate buy and sell arrows. You know exactly where your entries and exits and stops are going to be and what they're based off of. Okay? This comes along with the signal alerts. You also get the add-ons for the PET-D so that you can color the bars automatically red or green. We also include weekly trading lessons, tutorials, and archive videos. And then lastly, access to my personal email. So any questions you would have, anything you want to ask, something isn't making that big a success, you can always contact me and I'll get back to you. So all of this is included in our 2-for-1 deal. Now, we were selling these both separately because they're great techniques, and we were selling these for close to $2,000. But we're dropping the price once again, down 25%, down to $14.95. And the best thing is that there's payment plans available. We realize that $14.95 still may be a little bit difficult for some people to meet in one payment. If you'd like, you can structure some type of monthly payment plan so that you can be up and running with a small deposit today. You can be up and running and applying these as early as today as you'd like. So these are great techniques. These are great ways to trade and apply these 2 combos, apply what we shared with you today. I gave you tons of examples today applying the PET-D, gave you tons of examples on how to use these together. So if you're interested, I strongly urge you to take advantage of this really quick way to increase your odds for success. Now here's the way to contact us if you're interested in purchasing this or if you have any questions. You can contact Pro Trader Strategies. That's our sister site. They promote and market all of my courses and individual strategies. You can contact any one of their trading consultants at trading@protraderstrategies.com or call them directly at area code 310-598-6677. I want to thank you all for waiting for questions. I'll open up my question and answer box and answer any one that you may have. Let me see here. Ian has asked, let's see, all right, I may have skipped one actually. James was asking the PET-D. Do you use, or Casey asks, do you use the Ichimoku cloud in your decision making? No, we don't. That's not actually something that we use at all. We don't. This is based off of momentum. It's not based off of any type of pattern or any type of candlesticks or things of that nature. It's something, once again, that I was taught to on the floor. It's a proprietary trend directional tool, and its main function is to tell you the short-term trend, and it's really finely tuned for that. But you can also use it in the course. We also give you different techniques, such as we shared with you today, on how to enter pullbacks, how to use it to enter into consolidation trading, how to use it for stop placement. There's a lot of different ways to use it, but it's not a full-fledged strategy. It's just a great trend identifier. Okay. Okay, I'm sorry, James now is saying, is the PET D a proprietary formula? Yes, it is, James. It's proprietary. We don't really share it because we've had a number of hedge funds and institutional people that are interested actually in leasing it, and they'd actually like to purchase it, as a matter of fact. But we were at one point almost going to go in that direction, and we still may lease it to everyone in the future. We haven't decided that yet. We're probably going to wait till next year to make a decision on that. But if you purchase it right now, it's yours for life. So I would strongly recommend, if you're interested in that, it's best to take advantage of these deep discount right now, because you can have both the strategy and the PET D, and they're yours for life. They're not something that you will eventually have to lease. Okay. Let's see. Ian is asking, during a live market, for example, an uptrend, after a pullback, red, let me just scroll down, after pullback red, do you actually see the formation of a green PET D bar as it is forming, or do you see it after the green bar is formed? That's a very good question. No, it's a dynamic tool, so you will see the green as the bar is forming. So in other words, let's say we're looking at a 5-minute time frame, and all the bars are red, okay? The closed bars are red. The next bar that appears on the 5-minute time frame starts out with a color. Now, it can dynamically go back and forth because of the inner calculation of the formula, back and forth from red to green. And so you'll see it changing. Now, it's not usually something that changes back and forth that much. Maybe you'll see it change once or twice. So I don't want you to feel as if every second it's oscillating between red and green. It usually stays in one format, for good. But the thing that I want to make sure that you understand is that once the bar closes, it stays at that bar. It does not reformat or reoptimize later on because of future conditions and then change color. It does not do that. Once it closes green, it'll stay green. You'll look back years later, that bar will always be green. Once it closes red, it'll stay red. It will not reoptimize itself, okay? So that's one thing I just want to make sure all of you understand. We don't really believe in that, and it's not. It's something that is changing dynamically as the bar is open. In other words, it hasn't concluded yet, but once the bar closes, that's the color it stays, okay? Yes, there's no repainting at all, in other words. Ian has a second question, is with the PET D, if I have MT4 and TradeStation, can I use it for both, or do I have to buy another license? I believe you can use it for both, but you know what? I would probably contact the people at Pro Trader Strategies just to make sure to ask them, because I know it does apply with MT4 and it does apply with TradeStation, as well as NinjaTrader and Metastock. Okay, the 4 major charting software packages. But I would just, to be sure, just contact them to make sure if you're interested in purchasing that. Remember, this combo comes with strategy number 4, which in and of itself is a great strategy, probably our most popular strategy to date. Why? Because it transfers over into any time frame as well as any market. So I know a lot of traders don't just trade stocks. They may trade stocks and the futures, or they may trade stocks and currency pairs, or currency pairs and commodities. This works. We've had traders who trade this and say they just are amazed by how well it works in the commodity markets. Other people just use it intraday trading the futures. I use it personally intraday trading the futures. It works great. A lot of people just swear by it in the Forex markets. In fact, if you notice the Australian dollar, for any of you currency pair traders, has had a terrible month going straight down. We caught the very top of that downward move with a strategy number 4 sell signal. So it works tremendously. It's a great strategy in and of itself. Once you add the PET D, you really increase your odds for success. Okay? Let's see. Gregory asks, can you speak to expectancy of products? Well, by expectancy, no, you really can't, because once again, this is just a tool in terms of finding the trend. That's a basic or main feature. It would be like saying the expectancy of a moving average, or the expectancy of a overbought oversold tool. I mean, everything will work and then at times go into some small, little rangy markets, and the PET D will do that at times too, because it just reflects what's going on in the market. So the best thing about the PET D, though, is that, remember, it's not a system, it's not a strategy, it does not generate buy and sell signals. So there's no expectancy to it. It just tells you when you're in a trend. If the market is chopping, you're going to see a couple of bars red, followed by a couple of bars green, followed by a couple of bars red, and back and forth. So that is good because what it does is it keeps you out of being in any trades. And so it'll keep you out of a lot of things if you apply it as a confirmation tool, because it won't be confirming what you want to do. So it really is a great tool, but remember, it is not a trading strategy, so we can't get any results off of it or anything of that nature. Okay. Gordon asks, this may seem like a silly question, but I'm in the UK and I have no idea when the webinar starts. Oh, don't worry, Gordon. I think you may have caught it. I may be falling a little far behind, but don't worry, you caught the webinar. Let's see. Ed asks, I assume the PET-D has different settings, in other words, different look-back periods. Actually, no. We only have two specific PET-Ds. We have the standard, which is the one that just is basically should be used for the majority of the time, and we have a slower setting, which is mainly to catch for those of you who want to catch those longer trends and stay in the trend longer. And we give them both to you. So you get two different settings, but they're not something you can personally edit yourself. They're already fixed within, and we don't alter or change them. Nothing is optimized or changed. In fact, there's no settings for anything to be altered or edited. So the settings stay the same, okay? And also, we don't use any different settings for different markets. We just wanted to give you a standard setting as well as a slow setting, because we know that a lot of people aren't akin to day trading, and they don't want to get in and out quickly. They kind of want to take these nice trends, so then we provided them with a slower PET-D. So you get both of these in the package and along with Strategy 4, and feel free to experiment. Remember, we're an educational company. We're not going to tell you which is the right one to use, which one is better. There is no such thing. It's up to you to experiment, become a part of the process, and decide which best fits your needs. We have traders that swear by the standard. We have other traders that swear by the slow. It's up to you. It all depends what type of a trader you are, okay? Let's see here. Let me see what Fitzroy is asking. And you say a bit. Can you say a bit about the algo behind PET-D? Oh, the algorithm behind PET-D. All we can tell you, Fitzroy, is that it's based off of momentum. Okay, we're trying to use this momentum in order to tell us what the short-term trend direction is. That's what we're doing. We're basing it off of, we're not basing off of a pattern. It's not based off of volume. It's just a momentum tool, and I really can't go any further than that. You know, if you're really interested, you can call up some of the Pro Trader Strategies trade consultants and talk to them about it, or else do a search on Google, or Google search on us, and look at some chat rooms to see how people have had some tremendous success. In fact, he comes to many of our presentations. We have a really great student in India who trades nothing but Strategy 4 and the PET-D. He was an attendee, just like many of you are, came to this presentation for the first time, saw it, purchased the combo, and he says he has changed his entire lifestyle due to trading these two things. He can probably be found in the internet. His name is Hemant. He's a great student of ours, and he just applied these two things. And we've never researched. I don't even know what stocks are available on the Indian markets, but he trades them, and he says he does fantastically on them. So we have a lot of really satisfied customers just using the same sound techniques that I shared with you today. Okay, our time is just about up. We're just about up for the hour. I want to thank all of you for attending today and sticking around and joining us at this early hour. Once again, if this fits better for you, give us a note, drop us a line, and maybe we'll reschedule our webinars. But I really feel if you want to take your trading to the next level, this was one of the things that I was introduced to on the floor that changed my trading around, that got me consistent because I was able to trade in sync with the short-term trend. So this is the beauty of this tool. It's a great tool. Along with strategy number 4, boy, you're really going to increase your odds for success. We have people that are emailing me all the time saying, Steve, I love strategy number 4. It's great. And now we're offering PET-D as another tool to enhance it. It's really going to increase your odds. And if you want to get that level of consistency that I know you're searching for, I really feel that this can help you along the way. Okay? So remember, contact any one of the trading consultants at trading@protraderstrategies.com or by calling 310-598-6677. I want to thank you all so much for attending today. I hope that you take advantage of that really deep discount for both of these two things today that we're offering you. And remember, we have payment plans so that if you cannot meet that one lump sum, we can structure it so that you can be paying monthly on a monthly basis, but still get all the information as soon as today, okay? Thank you so much for attending today. I look forward to all of you becoming members of mine at Specialist Trading, and I'll see you next time. Bye-bye.